Kitco News, special coverage of the Mines and Money London, is brought to you by Sandstorm Gold Royalties.
Hello, I'm Michelle Makori, and this is Kitco News coming to you from the Mines and Money event in London. Uranium has been one of the hottest commodities in 2021. Spot prices hit a 9-year high in September, and uranium equities have had a fierce rally as nuclear energy gains broader acceptance in the effort to decarbonize. But how much room is left to run? Let's discuss this and more with Jon Bey, President and CEO at Standard Uranium, a Canadian uranium exploration company. Jon, nice to have you with us.
Thank you. Nice to be here, Michelle.
All right, so Jon, uranium spot prices hit a 9-year high in September, around $51 per pound. Now at around $46, give or take, per pound, still up over 50% year to date. Now, one of the reasons we saw this big increase and that high hit in September was the Sprott Physical Uranium Fund. That launch certainly boosted prices. But we've also seen uranium equities rally tremendously this year. Some of the uranium ETFs up over 100%. Give us the big picture fundamentals that have driven this rally.
Great question. So, the spot price was trailing around $34 for a long time, and then Sprott came into the market kind of unexpected. They started buying up, uranium off the spot market. That led to a nice rally from $34 up to $51. It's come back down to around $46 today, but it's got a long way to go. The fundamentals, the big picture is still supply and demand, and there is not enough supply out there to meet demand. So watch for big moves over the next year to come. So there's demand coming all over the world. China has just announced 150 new nuclear reactors to be built over the next 15 years, and that's only one region. I mean, the US still has 95 nuclear reactors in operation, and I think it's well known that we now have bipartisan support from both sides of the government here, both wanting nuclear reactors to stay operational longer, which is going to drive more demand.
Yeah, the sentiment towards nuclear energy seems to have shifted recently with the fight to tackle climate change and to decarbonize. It seems like nuclear energy is gaining broader acceptance, as you mentioned, getting bipartisan political support in the United States. Republicans have traditionally supported the sector, but now Democrats have also come aboard. But is there still a stigma when you look at the disasters of Chernobyl and Fukushima and 3 Mile Island? Is there still a stigma attached to nuclear energy, or is the clean energy climate change narrative superseding that?
I think there still is that stigma, but as you say, the climate change, clean energy is taking over. There's now been a sort of a climate change moving past that now, and we're starting to see countries around the world starting to accept nuclear and realizing that if they want to get to that carbon neutral future, nuclear has to be part of the equation. So we're starting to see, for the very first time, nuclear is going to be included now in the EU taxonomy for clean energy, which is going to draw a lot of capital into the nuclear uranium space.
Well, Europe is facing an energy crisis at the moment, with concern that if a hard winter hits, Europe is going to be quite literally freezing. Yeah. So you mentioned the change in terms of allocating funds to nuclear energy. Break that down for us and how the political shift in Europe has impacted demand for uranium.
Sure. So we'll go back in time when Fukushima happened. Japan, immediately took 54 reactors offline, and soon after Germany did the same thing. They moved away from nuclear and put their money towards solar and wind, hoping that would be a solution. But it's actually proven to be the opposite. Their price of electricity has gone through the roof, and their, the carbon output has not really improved that much. So countries around the world are looking at, comparing Germany to France. France has gone all in on nuclear. They're building more large reactors. They're moving to small modular reactors. They're producing clean energy, and they're selling that to Germany. So as climate change has to be tackled, nuclear has to be part of the solution.
And you say that it is now okay for pension funds in Europe and other institutional and government-led funds to invest in nuclear energy. Explain what you mean by the change in the taxonomy there.
So they've just announced at COP26, Germany is now supporting it as well, that nuclear is going to be included in ESG investing, which will allow funds to invest in nuclear when they're investing in ESG. And that's a big change. So we're watching for that to come into play. It hasn't happened just yet, but it should happen in the immediate future.
And what impact do you see that having when that does in fact happen?
That's going to drive more capital into space. It's going to drive more money into the ETFs, into the equities, and we will see, hopefully, the uranium equity funds start to increase and the equities of the companies like our own.
Spot prices, as we discussed, around $45, $46 a pound at the moment, up from the 2016 low of $17.75 per pound, but very well below that 2007 peak of $137 per pound. When you look at companies operating in Canada, such as yourselves, at what level does uranium spot price have to be for those operations to be profitable?
Good. So when we look at mines coming online and what numbers they need to work, we kind of break it down to different tiers. So we have our tier 1 mines. Those are the ones that can operate at a lower level. Those guys are talking about prices somewhere in the 40 to 50 range. That tier 2 needs to be somewhere north of 60 to 65, and for those third tier, north of $75 or $80. So spot price and long-term pricing really needs to move for a lot of these mines to come on, and that's going to have to happen.
And what is your outlook for that happening? Where do you see spot price in the next 6 months and the next 12 months?
Well, today we're at 46. I anticipate by the, 6 months from now, we could be north of, mid 50s and by mid 60s by the end of next year, hopefully.
Bank of America has a spot price target for around $60 by early next year. And that does happen to be the sweet spot where a lot of uranium producers need the price to be for them to be profitable and to resume operations. So if it hits $60 and that incentivizes more uranium production, that then would increase supply, and it stands to reason that with this increased supply, the prices would come back down again. What are your thoughts?
Well, to bring these mines into production, it's not like you just hit a light switch and they come into production. A lot of these take many, many years to get to that point. So it just can't happen that way. So it's going to have to get to those levels and go beyond 60 to get a lot of these mines to be financed to get put into production. So there's quite a gap there. So it'll take a while for that to happen. So we're not concerned about a big oversupply coming into the market.
Well, speaking of a gap, there is still a very large gap from where uranium is now to that all-time high of $137 per pound that we hit back in 2007. What is it going to take for uranium to get there again? Do you see that level being hit again?
Well, when that happened last time, there were a couple major incidents that happened, a flooding of a mine, which took a lot of supply off. I don't know if we're going to get that high. Some people are calling for it to hit $200. I've heard it being called to go higher by some pretty smart people. But realistically, I'd love to see spot price get in the high 70s, high 80s and stay there for a longer term, which is quite sustainable for many mines.
So you don't see 137 being hit in the next 5 years, 10 years?
I'm not going to say that, but I'd like to say that I'd like to see it sit somewhere around 70. It might have a spike up and then come back down. It's not unreasonable to think it could go that high again.
Okay, so what is your projection for a 5-year spot uranium high?
I'd like to see it in the 80s to 90s over 5 years. That'd be fantastic.
All right,
that would allow all our uranium companies to continue to finance and do our work and allow those mines to produce for many years and be profitable. That'd be great.
So that's the high. Now, keeping in mind, we saw a very sharp turnaround in 2008 after the financial crisis and during the financial crisis. What do you see as potentially derailing this rally that we've seen in uranium spot and, of course, the uranium companies linked to it?
Yeah, well, nuclear has always had that rap where little things can happen or big things can happen and they can have a massive impact on the space. So we hear people talking about, Fukushima, for example, in 2011. Big tidal wave comes, it has an impact, and it caused massive oversupply for 10 years. And we're still just getting out of that right now. So I don't want to see an incident like that happen again, but those are always things to think about.
Has the industry addressed those safety concerns? I mean, obviously, it's, as we mentioned, something that still haunts the sector, but have there been actual measures taken to make nuclear energy safer? Yeah,
it's probably, it is talked about as being the safest energy source in the world. And if you look at, stats that back that up, it's easy to see that, a couple incidents here and there give it a bad rap, but it's actually the most regulated and the safest industry there is for energy globally.
But have standards changed or have additional measures been taken after the events like Fukushima, 3 Mile Island?
And they're constantly happening. They're constantly being updated. Japan is now going through much more stricter regulations to bring their reactors back online. So, Japan took 54 reactors offline. They've got about 10 or 11 on right now, and they're talking about bringing 30 on in the next immediate future. And they have to go through stricter regulations to get there.
So the big picture, climate change, efforts to decarbonize, move away from fossil fuels, has a lot of people aggressively pushing for nuclear energy, which, as we've discussed, is a very clean form of energy. How does one best capitalize on this trend as an investor?
So I like to think of it as you want to look at your portfolio on multiple levels. So you've got the producers out there who are, making money when their mines are in production. Then you have that next level, which are the developers who are trying to get their projects into development. And then you have companies like ours who are exploration companies. Companies like ours, investors can have a little bit of exposure to, because when we make a discovery, the share price can take off astronomically, and that's where you can get a lot of torque on your investment. So having a basket of some exploration companies, developers, and producers is a great way to go.
All right, so let's talk about your company. You're a Canadian explorer. Why does it make sense for an investor to look at your company specifically?
Great. So we are a Canadian explorer. We sit in the Athabasca Basin, one of the greatest places in the world to find uranium. And our project, our flagship, is our Davidson River, which sits on the southwest corner, and it sits on the Patterson Lake Conductor. Now, right beside us, we have NextGen's Aero project, Fission's RRR, and we've proven out that we're on that same conductor. Now, if we make a discovery, which we're trying to do, we're trying to so that we can make find another Aero project in our project. If that happens, our share price could be a 10x or a 20x, similar to what happened to, NextGen and Fission when they made their big discoveries.
So if you're looking for a real upside as an investor, you're saying that the best play is to look at an exploration company and hope that they are successful in their exploration endeavors and then get bought out by somebody else potentially?
Potentially, yeah. What the real torque is when that discovery is made, and you want to look for companies that have a history of making success, that actually have a team that have made success in that region. They know those rocks, and they've got a lot of things going for them. A great project, a great team, the micro side, the macro side of the story, and being in a region like Saskatchewan, the greatest place in the world to find uranium, and has a great workforce. And not only that, they've got First Nations that are very supportive of mining. Sometimes they have issues with engagement with other clients, other companies, but realistically, they want mining projects to go forward, and that's what Saskatchewan has to offer.
All right, well, let's talk about some of the recent developments on the macro side of things. We've got, of course, the Omicron COVID variant shaking things up a little bit. Still not exactly sure how transmittable it is, how dangerous it is, how effective vaccines are against it. But from what we know so far, do you see it impacting the uranium sector in any significant way?
Well, I hope not. I mean, when we had the last COVID scare that happened a little while back, what happened was it caused a lot of projects around the world to sort of shut down, go on care and maintenance for a while until they were able to protect their workers and make sure things were safe to get put back online. So in our region, Cameco shut down Cigar Lake for several months. That had a direct impact on the overall spot price as well. Now, it's early stage with this new variant. Hopefully, it's going to be mild. And all the stuff we've been doing for the past few years to help get ourselves vaccinated and protect ourselves, hopefully that's going to make this go smoothly, and we're not going to be as impacted as the last time.
You're a Canadian company, but if we look at the big macro picture, we've got inflation around the globe. We've got the US Federal Reserve saying that they may have to accelerate their pace of tapering in order to try and control inflation, which Jerome Powell is now conceding is not that transitory. Yes. What does that mean for companies such as yourselves in terms of raising capital, in terms of operations? Does this have any kind of impact?
I would have to say at this point, no, for a company like ours. For us, uranium exploration will continue to go forward. The inflationary measures are, the amount it's going to affect the capital raising is quite little compared to other things which we're seeing, which are things more like, the workforce. Right now, there's been a real push in the mining space, and in Saskatchewan and in Canada, there's so many companies that are getting financed and they're trying to do work that it's really hard to find good geologists, good drill companies, any vendors involved in the exploration, and that's driving the cost of exploration up much higher than inflation.
All right. Well, Jon, thank you for sharing your insights with us. Appreciate you joining us here on Kitco News.
Thank you, Michelle. It's been a pleasure to be here and share our story.
Okay. Jon Bey, thank you.
Thank you.
Kitco News, special coverage of the Mines and Money London, is brought to you by Sandstorm Gold Royalties.